And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Tuesday early edition of HOAG Money. Looking forward to seeing if we can come up with any good trade ideas. We do have a special session today. We're having Matthew Hoyt, an old friend of mine from the trading floor, who uses Andrew's pitchforks to look for his opportunities. A lot of folks have been interested in it. I'm very interested to having Matt with us. This is me. I'm John Hoagland. I've been around for a little while and with Top Step since virtually the beginning. Let's go back to this. We got to do this. What's going on here? Am I having an issue? Shouldn't be. There we go. The rules. There it is. The CFTC disclaimer. Everything we do here today is for educational purposes only. We're not suggesting that anybody purchase or sell anything. At least I'm not. You guys are coming up with the trade ideas for me to make money. Anything we know about futures is there's a lot of risk. They are leveraged products and we can lose more than our initial investment. Risk capital is money that you can afford to lose. At Top Step, you don't have to put up the risk capital. Succeed in the trading combine, you will be using our capital to trade. We're not suggesting, again, the purchase or sale of any product or security here. There's no past performance will be indicative of future results. And we are going to move on to the rules for HOAG Money. Kindness and respect are expected above everything. We're going to have Matt really going to be the one that's going to be able to talk today. I'm not sure if Randolph is with us here yet this morning. But we'll see what he's got going on maybe a little bit later on. We're all going to be involved in the decisions. Context, of course, of the trades will be helpful. Matt will be sharing his charts. If you have any other trade ideas, put them in the chat room. We're going to use the chat rooms on YouTube and Zoom to discuss trades. Only those on the Zoom meeting will be able to vote for the trades, however. We're going to focus on the MES for opportunities. We're not going to trade just to trade, of course. We're not going to take losing trades, which is in large a joke, because we know that there are going to be losing trades. We have to accept that. We have to cut them. We have to move on. And of course, feedback on HOAG Money is always vital. You guys are maybe getting tired of hearing all this, but I got to do it. Let's bring up the charts. Let's bring Matt into the equation here. Let me get you over here, Matt. Amanda, I'm not sure if it went out just yet, but the recordings from last week's classes will be on YouTube very soon.
Good morning, guys.
Good morning, Mr. Hoyt. It's good to see you.
Good to see you, too. Welcome all.
How's it going?
Going great, going great. Hopefully we have a fun day and make money.
Yeah. Well, that's the goal here, right? At least that's my goal.
Learn some good things.
Yeah. Awesome. All right, let's dive into this. We've got the market opening in range just below value from yesterday. We probably won't be taking the opening range trade, so I'm just going to let you jump in, Matt.
Okay.
Pay attention, folks. This is a new way to look at markets, and when you already have a way and you get some confirmation from a different source at a similar level, that's confluence, and that can be powerful for you. So let's pay attention to Mr. Hoyt.
All right, here we go. Can you see my screen?
Yes, we can.
All right. right. Okay, so Andrew's pitchfork. Here are the rules of Andrew's pitchfork.
Ah, we've got a whole presentation going here.
Right. Well, this is just, you can cut and paste this or screenshot it, or this is why I like and use the pitchfork, because there's a mathematical probability that prices will reach the latest median line. That's what ML stands for, median line. The median line is...
Hang on. Wait, Matt. On YouTube, is everybody able to hear Matt? I want to make sure everybody can hear. Just keep going. They'll let us know.
Okay. So the median line is the center line of the pitchfork. So you take 3 consecutive extreme pivots, A, B, and C, and you bisect them from pivot A. That's your median line. Every other line is just called a parallel to the median line. Some people call them warning lines. Some people call them median line parallels. I just call it a parallel. So that is the pitchfork, and how it works is when price has an 80% chance of reaching the line that it is headed for. And when it reaches that line, a couple things could happen. It could consolidate. That happens about 10 to 15% of the time. It could zoom through the line, retest, then keep going to the next line with 80% probability. It could reach the median line and get rejected and then head down to the lower parallel with 80% probability. Now, when price reaches any of these lines, the same probabilities come back in play. It could consolidate for a while. It could bounce and go back the way it came. It could zoom through, retest, and keep on going. So once you know that and you say an 80% chance, you've got to be kidding me. That sounds like free money. Well, I wish it was that easy. It's still trading and it's still difficult. So the key is if you can stay disciplined, you can do a lot. Right now, I'm just looking at a 30-minute chart, and any trend line with multiple touches could become essentially a center line or median line. So you can see this downtrend line here on a 30-minute chart. 1, 2, 3 touches, comes through, retest, gets higher, retest again, and then goes off. Well, how do we figure out where price, where's my profit target? Let's say I got long here. I actually turn this into a pitchfork before it happens. So I take the point, the A point right here, the start of the trend line. My B point's going to be the farthest away price made it from the trend line. So that's the farthest away right there. And then I just roll it up, and I want the center line of the pitchfork to line up with the trend line. Voila, there's your pitchfork. Now I have this up here before price even got here, just as a barometer. And lo and behold, price comes up to this level. It does zoom through it, and then it fails. And where does it go? Well, it's headed back down to the center line or median line, which it does reach, then turns around again. So this is why I like the pitchfork, and this is how I use it from time to time. Now, what I'm really concerned about, let me just erase everything because every day's a new day.
Ain't that the truth?
Yeah, right. So price moves in swings. Okay. Everything in the universe moves in swings.
It's inertia, isn't it?
It's inertia. It's where's price going to run out of energy? And right now, what I do is I mark the obvious lows and highs, right? So we've got a lower low, price came down, made a low, came up here, came up, couldn't make a lower low, boom, broke above this high and was off to the races, right? We'll just do the main pivots here. And this is just a 30-minute chart, which I typically never trade off, but it's easy to show the main pivots, which is why I'm doing this way right now, right? So you're basically making higher high, price comes down. When it blows through that high, this becomes a confirmed swing low. Price makes a new high, price pulls back. Where's it going to stop? I don't know yet. There's a couple things I use to tell me where it might stop. A lot of times I just do a trend line off the first pullback. And that's one thing I can do. Another thing I do always is I measure the swings from peak to low or low to peak. A lot of times price seems to have an agenda and it's moving that far. Then I take that and replicate it and paste it over to the current high and say, hey, when price gets down here, pay attention. Maybe it's going to make a turn because that's how far it moved last time. You know, sometimes price can go through it. This is an exact science. It just a place to pay attention.
Sure, everything's a zone, right?
Right. So now there's impulse legs and there's reaction legs. And the time frame you're looking at, however much data you have on your screen, that's your frame. So in this frame, I've got impulse is the largest price move. That's your impulse. The pullback is the reaction leg. Then I got another impulse leg. Now I've got a pullback, that's the reaction leg. Now, if this leg takes out this low here, that's a change in behavior. And now this becomes my reaction leg. And the larger leg, because it took out that low, becomes the impulse leg. So when price came back up about yay high, I'd be looking for some kind of change in behavior, opportunity to enter a trade. Now the pitchforks come in because what I do is I connect the dots. So let's say this is my A point, this low is my B point, this high is my C point. A, B, C, what happens? When price turns around here, it hits the median line. Now there's a couple different types of median lines. When price is rallying and making higher lows and higher highs, I like to measure the reaction legs because I'm looking for where price is going to run out to the downside so I can catch the next impulse leg. Okay? That's the bigger move. That's where the action is. I want to be with the trend. Even though I'm measuring the downs when we're moving up so I can see where price is going to fail and run out of energy. So when price comes here and starts taking up to prior highs, time to make another pitchfork that shows the up move and the probable path of price. Where is price heading now? Let's make that blue. There. So now, with 80% probability, price is going to hit this center blue upsloping median line. Maybe it will, maybe it won't. It's 80% chance. So how do we get in on that, and what's my plan of attack? So there's a couple things you can do. One way to do it is you measure this reaction leg. It's the biggest reaction leg on the board. You clone it, paste it over here. When price comes down here, you just buy it, put a cash stop in. I don't like doing that. I want to hide behind market structure because market structure is protection. Market structure is going to be a prior high or a prior low where orders are resting. If you can figure out where the bigger traders have their orders, you can hide your stops behind those. That's going to save you a lot. So what I do, since I don't trade the 30-minute, and I typically don't trade the 5-minute either because the overnights have a lot of time drift where nothing's happening and it makes the pitchforks not so hot. So I use a range bar, 10-tick range bar in the S&P. Sometimes I do a 20. And that just eliminates time from the equation. You can use volume bars in the S&P, try 10,000 volume. If that's too slow, go to 5,000. If that's too fast, go to 15,000, things like that. You can also use tick bars instead of range bars. Range bars are just easy.
So it's all about the swing highs and swing lows when it comes to this. The time frame of the chart is less important than where those swing highs and swing lows are.
True. It's all about the swing highs and swing lows. That's what makes or breaks this system.
Okay, so we've got this on the 10 range bar right now.
Yeah.
If when the S&P is that center line, that not the median line, the line between where price is, the perforated line.
This one here. Okay, I call it the half C. That's the people call it the quartile. It's halfway between the median line and the parallel. Sometimes that comes into play. You can use that as well if you want to. What you're really looking for is you try to find the frequency of occurrence. Is price like this red downsloper? You can see on the handle, price is kind of dancing with this line already. That tells me it's probably in play. So I pay more attention to that. Sometimes you draw a pitchfork and nothing seems to be happening on it. So maybe that's, usually I discount that a little bit. Doesn't mean it won't work, but I like something that's more pleasing to the eye. Now, there's another kind of pitchfork. This is a standard pitchfork where the A point bisects the B point and the C point, okay? So that's your standard pitchfork. There's another pitchfork called a modified shift. What that does is it basically connects the A point to the C point and makes everything parallel to that. So on the software, I'm using TradingView. Most of these have a menu where it'll say shift or modified shift. You click on modified shift, and what that does is it brings the A point halfway up and halfway over, which also connects A to C, is the easy way to say it. And that's another pitchfork you can use. Now, what I do is when price is coming down to this orange, I'm watching closely. I try to zoom in a little bit. And I say, okay, there's a couple things I can do to kind of just keep my head on straight here. I like to draw a trend line. I can do it here. So, price is bouncing off here. I know we're in a downtrend until we break this trend line. Well, a lot of times we'll break a trend line and then come back to it. And coincidentally, a lot of times we'll come back to it where the trend line intersects with the lower parallel of the pitchfork.
It's amazing how that happens, isn't it?
Crazy. So now I like this also because we've got, price cascading lower. We've got lower high here, lower high. Let's make this white so you can see it better. Lower high, lower low, lower high, lower low, lower high, lower low. Boom, price breaks this high. So that's a change in behavior, right? Once price takes out a swing, that's a change in behavior. Now, I want to see something bigger than that, but this could be the beginning of a change in behavior. Could be a head fake, I don't know. But that makes me sit up in my chair and say, okay, now people may want to be buying down here. It was kind of a quick trip down here, so there could be a lot of people stuck down there wanting to get out, praying that price comes back there. And that's where I'm happy because I want to put my order in over there and make some money. So what I do is I use my go, no, go, which is basically, this just shows me risk and reward. Red is my risk, green is my reward. The minimum I'm going to do is 3 to 1 in my favor. I want to be able to afford the trade, and I want my stop to be below the lowest low in the perfect world. So this is the swing low here. As long as my stop can be below that, a couple of ticks, maybe a point, I'll play the game here. So, and my maximum risk in a S&P micro is 10 handles, 10 points. I don't want to risk more than 10. And if I'm risking 10, I usually want my reward to be more like 4 to 1 instead of 3 to 1, because 10 is like the maximum risk. A lot of times I'm risking 7 or 5 or 8 or maybe only 4. Typically I'm between 5 and 10. And if I'm at 10, I want it to be like a really nice looking setup, or I'll just cut my size down. Kind of just depends on the situation.
Is this go no go thing available to anybody on TradingView?
It is. Yeah, it's just it's called long position, short position.
Got it.
I just call it a go no go because it's like, am I going to go with the trade or can I afford the trade? I want to see the risk reward before I start playing. So what I do is I take it where price is right now. If my order was to get executed, I'd be filled at 40.13. My stop would be at 40.03 if I use all 10 points. I don't need to use 10 points because the low is at 7.5, so I could be at 6.5, 6 even, 6 quarters, something like that. So now, if I ride this out and price actually does hit the median line right now, it would be 9.7 to 1, which is a huge winner. You know, let's think about this. You're at 40.12. You're thinking price maybe go up to 40.70. That's a huge move for today, which probably isn't going to happen because we've got FOMC, we've got major earnings on Thursday. I'm expecting today to be kind of chill.
Right. Right.
I'm not looking for a 70-point move today. Some days I am. On a lot of days, just the way the S&P has been moving lately, it's not so hard to take 20 points out of the market. Sometimes between 20 and 40 points is what it's been doing. So you kind of got to keep your perspective on straight. And also your time frame. I mean, a lot of people here, you need to be out at 3 o'clock or 3:15, you know, and a lot of people don't want to hold it all day long. Typically, if I'm right in the morning, I know I'm holding on the trade for like an hour or 2 hours. Because if you're right around 8:30 or that 9 o'clock move and it's going your way, it's going to go your way till about 10:30 or 11, seemingly has been doing that, which is a really nice chunk of change. And what I also do is manage the risk. So the key is, like, let's say price comes down to here, however it's going to move. I buy it, and basically my stop, once price gets above this last little swing high, price gets above that, I immediately move my stop to break even.
Because that's your change in behavior.
Yeah, that's my change in behavior again. So that's my rule. It has to, you know, I always want to stay in as long as I can, especially if I see a bigger move coming, so I'm not so quick to move my stop. But once I see that, the rule is I have to move the stop to break even. Or maybe just 1 or 2 ticks below the lowest low over here, however it happened. That keeps me fresh. It keeps my spirits up. Nobody likes getting stopped out of a trade and then having it go to be a big winner, which is why maybe I'll keep a couple ticks of risk on. But if it comes back there and blows through it, there's no reason to lose, you know, my full nut on it, because if price comes back, it's probably not good anyway. You're probably not going to want it.
Right. It's rejected that change in behavior.
Rejected, right. And it's also rejected the pitchfork, because the pitchfork has a probability. So another rule on those rules that were there, if price fails to reach the median line and leaves like a space, it's short. If it comes down and breaks the lower parallel, your minimum profit target is the same distance, you know, above through this line as it was above it. So it would be here. That's my profit target. If I'm gonna reverse on a failure of this pitchfork, my profit target's right here.
So it's the same distance from
from up here.
From the main line.
Exactly. So every line has these rules. There's a lot of symmetry involved. It's like it's based off Isaac Newton's law of physics. Every action has an equal and opposite reaction. And you can see when you start drawing more and more, we'll go back to the 30-minute chart.
It's inertia.
Yeah, I mean, just like I said, when I measured up here, the center line, right, here's your action. Line up the center line as if it was a trend line along this. So touch, 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 center line, action, reaction, right? So this is kind of like how pitchforks work and why they work. I don't know if that makes any sense to you guys. Hopefully it does.
Yeah, it makes perfect sense. I mean, it's all about the measured moves, right?
It is. And then it's just like, how do we get in a spot where I'm protected and I don't have to use a cash stop with no market structure protecting me? I mean, well, that's great. You're not always going to get the setup you want. Sometimes you pull the trigger for some other reason.
But I want my setup.
Right. I want my setup. I'm willing to wait for it.
Mm-hmm.
Because it keeps me safe. And I know when I lose, I know I'm going to lose a little. And when I win, I know I'm going to win a lot. And I know that as price cascades in my direction, every time we take out a prior high, I'm going to now snug my stop above the prior low here and just follow the stairway up all the way to the bank.
Ka-ching. All right, I got a couple of questions for you, Matt.
Yeah.
Fred is saying, you know, this is cool. It's a lot of information,
It
He's
is.
asking where to find out more.
Let me see. There's a couple of links. There's a couple of channels. What I can do is I have the original Dr. Alan Andrews action reaction course in a PDF. I'll email it to you, Hoag, and you can send it out.
Okay.
Now, be careful with this course. It's there's a lot about action reaction. There's things in there that are totally worthless, like the horn of plenty and this and that. Just focus on the median lines, because you can get lost in the action reaction thing forever. I mean, the guy who invented this was a stop and reverse trader. So that's kind of how he played.
Okay.
And he was like, you know, he did it on the daily chart. This was like in the 1920s. The whole history is there. So, you know, nowadays you can use a 30-second chart. So different time frames work differently. The daily chart is certainly very powerful on this, and it shows a lot of good things that you can use.
Okay. Matt, you send that to me. Anybody who is interested in getting this PDF, email me and let me know that that's what you're looking for, and I'll forward it to you. My email is jhoagland, JHOAGLAND @topstep.com. It may take me a day or two to get to it, but I will get it to you. This is going to be recording. I did record this. It's also, of course, going to be available on YouTube.
Mm-hmm. Now, this is just the S&P daily chart. You can see, we look at this every morning. We got the touch. We came through here, CPI, and then failed. Here, look at this. Let me see. Get this off of here. Okay, scan. So any trend line with multiple touches, you can kind of predict and make it into a pitchfork. Like right now, you know, the whole world is watching this downtrend line. This orange one, right? I mean, this is the trend line of the ages. So what we can do is say, you know what, if this thing cracks to the upside, where are we going? Well, you start at the beginning here. That's your A point. Your B point can be farthest away from the trend line. Then you just stretch it out. And when the center line lines up with the trend line, you just leave your C point out here in space and say, okay, if price starts moving above this downsloping center line, it's the action reaction. You know, we had all these touches. Price the furthest away is here. We feel like price is going to go somewhere up this, touch this line here. High probability of that happening.
Nice.
Yeah.
That makes me happy.
Yeah, so now here's my one stopper on this is this little white line here. You see this, the CPI number when we came up and broke the anomaly, right? So what I do is I make something called a sliding parallel. It's the only move above this line. We didn't close above it. But what I do is I make another trend line with the same slope as, you know, my pitchfork or trend line, and put it on this poke through and say, okay, that's my sliding parallel. So if we get above, that's my real line in the sand right now that we have to get above. Now, we touched it the other day. We poked even through it, but we didn't close above it. Then the next day, that was like the high of the day, was right on it. And here we are kind of floating around here waiting for this number to come out tomorrow. And then Thursday, the earnings for Apple and Google and all the big juggernaut tech stocks. So it could be very telling very soon which way I feel like we're going to go in the big picture, right? And you can see I always measure these swings up because I want to see where they end up. What's the agenda? You know, they're hitting it in this with this rhythm. That's just how it's going. This one's a little taller. So next one a little taller also. Let's see what happens. Here we do that. Slide it back. Look, I mean, it's like to the tick. So a lot of times, you know, you're literally right there. You know something, and you're looking at something that other people aren't looking at, right? And especially these daily moves and
that's a
like
good
the
thing.
You have a 240-minute chart, so it lets you like hone in on something. So now when price is up here or price is up here, let me go to my little short-term time frame because I'm more of a day. I want to get in and out in the day, and I draw a line across. I say, okay, so that's that area. Let me see what happens when price gets here, and let me look for here. I'll show you right now. Here we go. So price is moving up this leg, higher high, higher low, higher high. When price takes up this high, the lowest low between these two highs becomes your structure, right? So we're looking for a change in behavior. The last swing busted. So this upswing here, let's see. You can see it gets busted, and when price gets busted in a nice way, right? Not a little poke through, but really broke it. When price was moving up, I'm looking for that measured move. Now, yesterday I happened to get short right here, which was nice, and my stop was right here. And I wrote it out, you know, it took a while, but I made a nice 4-to-1 profit on that. It was easy money.
Nicely done.
I had that little cascade to protect me, you know. And typically the biggest swing, like, so once I get the change in behavior, I'm going to follow all the legs down. So this is, I call it my last swing busted. A lot of times it comes into play and it gives you a really nice setup. And it's usually the first pullback is pretty close in size to that. For whatever reason, I see that a lot of times, which is juicy because a lot of people are still long and they're playing this as a head fake and price is on its way back up, right? Which you can do. And I do that too sometimes. It's like, okay, I'll play in here, but when price gets up here, I'm snugging my stop up, because if it fails there, I'm looking to get short and take it down and make a new low, which it did here actually. And what I do is, once I have my swings drawn in, I'll do a pitchfork here and use it as kind of like a pendulum pullback, like a failure, a measurement of where price is going to run out of energy, so I can hit it and write it out as a failure. So price failed to reach the median line here. It touched it here and it tried to hang in there. It failed, came back. That's where I sold it. And then my target typically is the next median line, or the next parallel, which price hit. So sometimes things just work out that way. You just got to be willing to be fluid. Now I can also turn this into a modified shift. Sometimes this line really catches this move perfectly, and then whammo, you're in. Now, that's when you're doing like a pullback measurement. If you want to measure, go with the flow, we're going to do the high, low, high. And that's your probable path of price. So you notice this is super steep, and price didn't respect the pitchfork at all. When it's too steep, you change it to a modified shift. You can see how price, you know, kind of hung in there. It described price, right? It certainly wasn't perfect. So a lot of times what I'll do is I'll have my pitchfork going with the flow to show me the path of price. Let's just make that red because it's a down sloper. And I'll have the up sloper on there for the pendulum pullback. So this gives me the point of confluence where the two forces kind of intersect. So I have the blue pitchfork measuring the upswings, right? Where price would probably run out of energy. And I know that if price fails this line, the blue upsloper, it's going to the next blue upsloping line with an 80% chance. Well, that's where it's going. How about when is it going to get there? Well, if I want to know when it's going to get there, a lot of times you can do the downsloping probable path of price pitchfork as well. So now you have both, the best of both worlds in play, right? So a lot of times these opposing line of forces, where they intersect is a place where price will meet in time and space. So a lot of times I have both up and say, okay, how long am I going to be in this trade? What's realistic? I just use this as my roadmap to guide me. You know, nothing works all the time, but sometimes this works really great. Sometimes it doesn't work at all. That's just how it goes.
That's with everything, right?
Yeah, I mean, this really helps me because it gives me something to follow. I don't need to know what happened in the news. I don't need to know what Goldman Sachs said about stock ABC or XYZ. I just need to know, how is price swinging? Where's it going to run out of energy? Now, I mean, news is important for these economic releases. It's nice to know what's happening. And sometimes I don't know what the news means. It just seems like a bunch of baloney used to manipulate price, which is fine because I know that when I see a change in behavior, now I can play and I feel comfortable with my strategy saying, okay, I see price failed this line, but it came back to it. It's kind of respecting it. I don't see anything super juicy here. I mean, you can see it's been a very slow day so far. Nothing's really happened.
Right.
So maybe I can say, okay, I don't want to take a trade out of boredom, but this is the highest high I see on the board. If we crack that high, the lowest low after that high would be right here. Right, not sure how high we're going to go if we blow through this, but let's just say we go here and pull back. Maybe we get around here and I say, should I take a trade here? Is there anything to hide behind? Well, my swing low is here, so that's 40.35. I'd be at 40.43. That's 8.25 points of risk. I don't feel like I'm making 24 points, but maybe I am because I'm going up to 0.74 to touch this line. I don't know. It's tough to play the slow markets for me because it's just you've got to be smaller and quicker, which is fine. I've made a lot of money being small and quick, no problem. I call it the hummingbird. Zip in, suck down some nectar, zip out. Repeat. It's the fastest bird around. So, the hummingbird strategy can be very strong when my mindset is right. And that's the key. And that's why I use my go, no, go. It keeps me disciplined. Like, I've slapped this on here. It looks silly. It's obvious. It's easy to use. It keeps me in check, right? When I catch myself doing something like this, I'm like, okay, I know this is what we want. How realistic is this, on a day like today? Not very realistic. So let's get back down to earth. Just play it small. Take your 3-to-1, get in, get out. Nobody gets hurt, and keep on going. And if you can do this and have 3-to-1 consistently or better, you're going to thrive way better than most traders will. The guy who taught me this, he used to do seminars. His name is Timothy Morge. He passed away a couple of years ago. He was a trader since like 1970. His average realized profit was 3.6 to 1 over that time period. He was worth about $800 million.
Holy smokes.
Yeah, so he's like, listen, a lot of times you do your pitchfork, price comes up, hits it perfectly. Yeah, you make your money. He goes, sometimes it keeps on going and like that. And you're like, oh, I could have stayed in and this and that. He's like, listen, that's greed talking. Yeah, you could have stayed in. You could have also gotten smoked when price comes all the way back and destroys you. He's like, that's why the saying is pigs get slaughtered. Pigs get slaughtered because what it is your greed gets the best of you and you leave your stop at break even because you had a couple winners and you had an 80-point winner in the NASDAQ and you didn't snug your stop to lock in 20, 30, 40, anything. And maybe that's how the market moved, but maybe there was some kind of stair step you could have hidden behind, but you wanted to stay in because you were looking for a 400-point move, and that's fine. But when you get stopped out at break even,
don't cry.
You decided, then don't. If you become enraged, you can't do that. That's not a good fit for you yet. You have to kind of graduate to that and be okay with it.
So true. So true.
It's always okay to take your money. You can always get back in. It's a trap. He's like, I fall into that trap all the time. And when I do my reflection period, if I felt like that was that's the penalty on me, I go in the penalty box and I have to take a day off trading.
Yeah.
He's like, look, there's no one telling me what to do. I make $800 million. He's like, it's me telling me what to do, So he's like, believe me, there's no escape from greed and fear. There's just knowing how to work with it and understand it.
Well, he's made $800 million. I guess he can tell himself what to do.
Yeah, the thing is, he's right. When he does it, he's right. That's the thing.
It's like when I hear music that I don't really like, but they actually have a record contract. I say, well, they've written more songs than I have, so God bless them. Right.
Right. Exactly.
Couple of things. Just for clarity, I've had a couple of people asking on a blank chart. Just put up one pitchfork. Where would you put it? We don't want to screw up all your charts, but
on this chart right here, right now, I'd be doing this. Well, I'd be thinking about doing this. What I want to see, before I actually use this would be for price
to get below that
crack
level.
that low. I want to crack that low. This is the highest high, right?
Right.
I mean, you could say this is the highest high too. So this low, they're both kind of in play. Price cracks this. I'm waiting for a pullback up to here to try to sell it. Stop above here. Right, and maybe, let's see what the modified shift looks like. Right, I got some play on the handle, but it's not super clean.
What does the modified shift do?
So the modified shift on a very steep move, a lot of times your standard pitchfork is just too steep and price isn't going to move that fast. So what it does is connects the A point to the C point, and it does the same thing. The probabilities are exactly the same. And it has a mathematical probability of 80% to the median line. I mean, right now I feel like maybe we're biased to the upside because
Higher highs.
yeah, exactly. That's what it is. It's a tricky little game, but this is what I'm looking at. You know, we got above this. We're not failing down for the downside. You know, so for right now, I feel like if we can make a higher high, we're making, that's the uptrend. The uptrend is in. And I'm looking to buy it. Right? So maybe right now, if I was bearish, I'd be right here, just the last couple swings. I don't want to use too much. Give me a standard pitchfork. And that's your pendulum pullback. Look, price comes up. Boom, price comes up.
Right back to the median line.
And here it goes. It's ran out of energy. Now for this, you're playing the failure side of the market and saying, okay, price is going to fail. At least down to here. Sometimes you get a double down to here. I mean, this isn't a bad play. Think about it. I mean, price did the upswing here. Here's my measured move. Boom, right down here in the same area, right? You could sell it here. You kind of have a cash stop because I don't see, there's no like, you know, there's nothing back here. This because price took this out. So this is a little against the grain for me. I'd feel better about it taking a trade if I see price crack this line, then come back up here. Now I'm a seller. Knowing that I'm going to use a tight stop, price could easily blast through me, I'm okay with that. Because the risk reward, if I go to the line down here and I just take it a couple ticks above, let's say like I'm right in this area for the sell. I mean, I'm 6.6 to 1 if I'm right.
Mm-hmm.
And the risk, what is it?
5.75
to
points.
1/2. Right? I mean, 5 points.
Mm-hmm.
I can recover from a 5-point loser in a day, no problem.
Mm-hmm.
And you know, I lose a lot. So if you can use this with this math and your minimum profit is 3 to 1, I mean, this is kind of a slow day, and we're looking at 6 to 1 right here if we're correct, if we take this trade, which I'm not really ready to do because I just haven't seen enough yet. But you know, if we're right 3 out of 10 times, we're still making money. And if you get good and you're right, you know, 5 out of 10 times, you're going to make more money than you would know what to do with. And then you start increasing your size and you find other things to do and other ways to use the pitchfork. I mean, but really the main 2 ways I use the pitchfork is I'm measuring for where I want price to fail and continue on its trend lower or whatever it's on. If this is my time frame, I'm looking at prices in the downtrend. You know, if I have more data on my screen, well, then price was in an uptrend, but look, it cracked this swing low, it cracked every low here. Fine, but now maybe this is going to be the big move up. And if you put too much data on your screen, you're going to get lost. You have to change your time frame, right? You can't scrunch up a daily chart back to 87. It's not going to help you. 3, maybe 5 days is the most I'm going with these range bars. Otherwise, I'll switch to like a 240 or a 120-minute chart. Just because if you go too big, it doesn't make sense anymore.
I've got an interesting question for you, Matt.
Okay.
Demlick on YouTube is asking, swing high and low cycles are often broken by market makers, which reduces the probability of trades taking place. What solution do you have for this, especially regarding the risk of consecutive losses? The market makers, I think he's talking about algos, HFTs.
Right. So everybody knows. So the whole thing is the swing, right? So the swing's job in life is to make a higher high or a higher low, whichever way it's heading, right? So here was for sure a nice head fake. And I got short here and it looked good. And I moved my stop to break even as per plan, and boom, too bad. You get out. That's why the key is you're going to have some time to move your stop to break even. The key is, are you doing that? Because if you're not, that's where you start racking up all the losses and it's eating away at you. That's why a scratch is a winner. A scratch keeps you in the game. It keeps your finger on the pulse of the market.
It's all in the discipline.
Right? Yeah, it's the discipline. And it's not easy to do. I mean, there's times where, I blow it. It's just how it goes. Let's see.
You mean you don't never lose money?
Yeah, I know. I'm so terrible.
Part of the game.
It's part of the game. I mean, it's like tell my kid, I'm like, look, you want to play tackle football? Part of the game is getting tackled. If you can't stand getting tackled, that makes you want to kill the guy. Well, I'm sorry, you can't play.
Right. Well, you just say, if you don't want to get punched, stay out of the ring.
Exactly. Now, I also play around. I got here. The Dow I don't trade. I have a Dow lemma with the Dow. I've never done well in the Dow. The NASDAQ.
Dow lemma.
It is. It's I don't know. I can't trade the Dow. I don't know why. I can't win. I can trade it. It's just not a winner. The NASDAQ. Sometimes I'll use the 25 range or the 50 range because the NASDAQ's so fast. You got to use a bigger spread here.
It is fast. Gives me heart palpitations.
And sometimes, so here, what am I doing here? Let me see. So here, I use this as my A, B, C, right? So if I did a standard pitchfork on this, it kind of doesn't show me anything. But if I use the modified shift, it kind of catches this real nice.
Right? Real nice, yeah.
Real nice. And the thing about these ranges is they're great to play in if you have a nice cascading upsloper with the lines capturing it real nice. I mean, it's a good trade to get into. The NASDAQ looks like maybe something I could maybe try to buy it down here for a play up to the center. Then when you get good at this and you're okay with letting it ride and coming back on you and this and that, you'll notice that action reaction is always in play. Because here, look at this range. Let's see if I can just trace this. So this is the trading range. A range can be sloped. So here.
You're talking about getting greedy.
Yeah.
Man, I've learned when I start to think, all right, this is a good trade. How much can I take on this? How much more can I get? I always put in the high or the low when I think that. If I don't take the trade, I end up giving a bunch back.
So this is why I like to have these warning lines, because a lot of times these modified shift pitchforks, you can see how it kind of looks like a channel. It's different than a channel because the channel does not have mathematical probabilities, but when you use the 3 points, it has probabilities. And when price breaks out of this range to the upside, it's probably going to double the range. Same is true as if it breaks to the downside. High probability, it's going to double the range. So a lot of times I'll play, when I'm not in on this move or whatever, I'm like, okay, I can try to play and catch the move here, but if price fails here, I'll look for a comeback and then I'll sell it down. Like, I always know where I'm going. I always have a target in mind, so it's been really very helpful in my trading. I mean, when I traded on the floor, I use the hummingbird all the time. It was like my little quick.
Yeah.
There was no pitchforks. I don't know what a pitchfork was. I used to trend line, watch the cash future spread, the difference between the fast cash and the future. And at that time, futures were trading like 80 points over cash. So I noticed, I stood there one day all day and just watched the cash and the futures trade. And I noticed that it kind of breathed a little bit, like the cash would trade, futures would trade 80 over cash when they were going up. Then on the way down, they would trade 70 over cash. So there was like a 10-point in between that I could catch. So I'm like, okay, futures are trading 80 over cash. Let's sell one. I sold one, and guess what? Futures kept on rallying. It just stayed at 80 over cash. So I'm like, okay, let's get out of that, loser. Figure it out. Like, what did I do wrong? Well, what I did wrong was I didn't wait for some kind of change. So I'm like, okay, I wait for a change next time. So futures are trading 80 over cash. Then they level off. You can see it like, oh, it's 80 over, it's 75 over, it's 77 over. Now they kind of ran out of momentum. Then I sold one at 80 over. And then I'm like, okay, well, when futures go down, they'll trade 70 over cash. So I'd have my bid at 70 over cash and keep it at that ratio. So a lot of times my main game, which is moving orders around, moving my profit order around, getting my stop to break even. I didn't really have a target other than when futures, get hit hard enough that they're trading 70 over cash. That's just when my buy order would be hit. Interesting play. It was a lot of work moving orders around. I used like a Microsoft Xbox controller on the Globex terminal. It was a lot of fun.
I miss the old pit days, though, don't you?
Yeah, I sure do. They were a lot of fun.
Amanda, I don't see that the pitchfork is available on Tradeovate, but I have not looked through the community indicators to see if anybody has created one for it. We'll take a look at that maybe tomorrow and in group coaching to see if we can find something that works. Shaw says, yeah, you can install one. There is one there. So excellent. Thank you, Shaw. So it's, a lot of the measured moves and the changes in behavior is what these pitchforks really kind of point out to you, isn't it?
Definitely. I mean, that's my bread and butter.
And I'd like to talk to you after class about changing your behavior.
Yeah. Tell me about it.
Just kidding.
And the thing about it is nobody's, change is hard at any level. Nobody wants change. Oh, they're putting in a new traffic light down the street. What? Community meeting. No, everyone's up in arms. It's just every little thing about change. Change is hard to do.
It
is.
If
you can see the change. If you see the change early, you can get in on these moves where, you're already in. And then by the time the rest of the market catches on, they're paying you to stay in.
Matt, that's very profound what you just said, and I talk to people a lot about the fact that change is what this is all about. I mean, people will resist change no matter what. They'll do anything to stay right where they are, and if you can't make that change, of course, change to the worse is always scary, and it's always always being avoided. But change for the better is also scary because we don't know the outcome. Anytime we don't know the outcome, there's a degree of fear involved, and accepting change. I mean, what is futures? It's all about profiting from change.
Right. I mean, if price didn't change, none of us would be here.
What would we be doing? We'd be staying around telling jokes.
Right.
But if you can't...
Another good thing about the pit was there was nothing to do. That's what we did.
That's exactly what we did.
From making bad trades and just, doing something out of being bored. So we have this little, so price is in this little range here. I call ranges, contraction, coil, price in the coil. It's gathering energy. The longer price is in a range for, the more energy it's going to have when it explodes out to expend that energy on a trip, probably up to the median line. Or at least double the range for starters.
So will you fade extremes of ranges until there's an acceptance outside of it and then go with it?
I mean, a lot of times I'm looking for a change, then a quick pullback, like a Zoom retest.
And then go.
Who got Zoom? Boom. All these guys, Zoom. Price comes right back up, Zoom, and now it's
ranging.
Making all these little swings. This is nice. This is giving me something to hide behind, but it's just too small. I should say too small. It's just not my mojo right now. If I see something like it's out of my way, you're in my way the whole time. Here's my drawing here. So now this is the last swing busted. Right now I'm interested down here. That's good trade location, you know, and I'm either going to hit this with a resting order and just accept that my stop is, you know, at 0675. Well, that's a 10-pointer. It's a lot to just put in there and hang it out.
Right.
Because I don't see enough down here, just a spike. If it looked different down here, I'd maybe be more inclined to play like here. If it looked like this, you know, we had a low, price came down, made a lower low, came back up, then took off. Now I've got a lot more here to work with. I've got this kind of multi-pivot line of lows and highs. This is easier for me to just hang an order out there versus a spike. Coming to revisit a spike, I'll probably wait for some kind of zigzag before I get in. Right, and then price would come down, take out the little high here, come down again, then
Test it again, put in a higher low, and then go.
Right, exactly. I love that higher low. That's my protection.
Awesome. Well, folks, I've got to move on. Matt, any final words? Make sure you send me that PDF. And again, if you want that information, email me. Let me know you're looking for it, and I'll forward that to you.
Now I have something else for you guys. Okay, so Timothy Morge made a ton of videos, okay? You can see his original stuff if you go to YouTube and go to Rapid FX. Click on this guy, click on videos. Let's click on playlists instead. Timothy Morge right here. Now this guy's videos are like 2 hours plus long. I usually run them on 1.5 speed. I mean, he'll explain the median line to you. The Q&A at the end is awesome. This guy managed the 4 top sovereign wealth funds in the world for like over 10 years, probably over 20 years. So he was the guy I originally learned from. Now, there's another guy. So that's Rapid FX, Timothy Morge. The other guy is Language of Markets, Shane Blankenship. He was one of Tim's major, like, top students, right? And he's got his own website now, and he is great. The way he teaches, for me, is so much easier to learn from. So I would go to his website, if you want to keep it simple for starters, and look at map any market in any time frame. Sorry guys. That's what I can give you just off the cuff, because I watch those all the time. I watch Shane Blankenship's videos all the time. It's very relaxing. They're like 20 minutes a pop. He's a great teacher. He's easy to listen to. And, you know, he's available. So you can even reach out to him if you wanted to.
Awesome. Thank you very much.
Yeah, sorry, I don't see any trades today, guys. I mean, you know.
I think we've done much better with our time today, watching what you're looking at with these pitchforks and listening to you than actually looking for trades this morning.
I mean, I've got nothing to do here. You know, there's just nothing. A lot of time, look, if you want to lose a lot of money, when I lose money, I trade in a range.
Yeah.
You know, these little ranges will chop your head off. You'll be frustrated. I know I will be. I go mad monkey. So I'm like, look, I'd rather be happy-go-lucky. So I'll do some studying. I'll look at some charts that I did. I'll see, you know, what did I do the other day? Where did I get in? Where did I get out? What could I do better? What could I do different? You know, it might not be better. It might just be different. Like here in this NASDAQ, what am I doing? 20R. I can see here's a great trade I got into. Right, price zoomed up. That's the impulse. It took out this prior high. It came down in this cascading fashion. Zoomed up here. I got in. I scratched this trade because it was like before the 730 number. Then price let me back in down here, and I rode this up. You can see these greens are my stops. I'm moving my stop up. Then I got out. I mean, it was a perfect trade. Perfect.
Nice.
Trade. This trade. Okay, so here's a trade I got greedy on. perfect entry. I mean, it was a laser strike. Okay. I mean, I'm in. It's 7:30 in the morning. I'm moving my stop just to keep my stop like below here. I snugged it a little bit, and then I'm like, okay, I'm just gonna leave my stop there. Get the kids off to school. The market opens. Oh, it goes my way right away. Oh, this is the day. We're gonna go up all day long. We're going up all day long. No, we didn't go up all day long. I was so cocky. I even bought more here, and then I got stopped out. Then I missed an entry here. That's okay though. I, was disciplined and I wanted what I wanted. And I got this. This was the entry in the S&P that I actually did get. Here I missed it, and that's okay. And now here we are. Kind of doing nothing.
Just reviewing.
Yeah. Yeah. And that's why, I use this for a visual, like, because sometimes I look at this and I'm like, oh my God, why did I think that was a good place to put my money on the line? This case was, but there's some, when I go back, I do screenshots, and I usually save my winners. The losers, I'll look at them and I'll say, look, you know what you did? That was just a bad idea. You're obviously upset about something, or just not all there, having a bad day. There was no reason to put that entry there. And you've got to know kind of what swing you're playing. Look, because there's a lot of little moves, reaction legs you can measure. Take the biggest one on the board and take the second biggest one. That's it. The little ones are little for a reason. They're meant to be broken. It doesn't change the trend. So, try to play the bigger legs on the screen, and that'll kind of keep you out of getting chopped up in these little legs. I mean, it's okay to play the little legs. Just know that you're playing a little one. There's a difference. When you play big, you're playing big, and it's different than playing small. Small is quick. You got to be quick when you're playing small. When you're playing the bigger legs, it's okay to let stuff ride for longer and play out more and develop and flower. The little ones, boom, that is the flower. A lot of times when I was a younger trader.
Your hummingbird.
Yeah, I did great playing the little swings. Then I'd be like, oh, this was going to 1,000, It's like, no, dude, you're taking 25 points a pop out of the NASDAQ. Stick with that. It's not that setup, But it's easy to get, godly on the whole market. Say, it's so good.
Oh,
I made 25 points. Why can't I make 75 points on this one? Well, you can't make 75 points on this one because the market's not paying you 75 points.
Right.
It's not moving in that way. So you kind of got to stay in touch, stay in tune with how the market's moving, right? And that'll help you also, I hope. I mean, it's helped to me.
Very good.
This is giving me, life. And now I'm trying to combo this with market profile. Sorry, I'm kind of rambling on here.
It's all right.
But like today, what's the point of control in the market profile? What's the value high? What's the value low? And where does that fall into my leg in the S&P? Like I thought there was some kind of number, a value high or low around 57, was it? Maybe that was the point of control from yesterday. So I don't know. It's just interesting because when I'm measuring my swings, I'm like, okay, we'll go here to here.
57's value high, 58 pretty much value high from yesterday.
Okay, so right. So when I measure this reaction leg to the upside here, I slap it down here. Where am I at? 46. Well, 10 points away from 57, kind of far. Okay, but what if I measure the last swing busted, which is different from the first pullback on the down leg, this being the last swing busted? Where does that get me? Let's make it a different color. And when there's too many lines on the chart, just cut it down.
Yeah, for sure. Simple.
It can really get too much. So here, the last swing busted comes in at 54.25. Now that puts that value area more in play for me, right? If that's what I'm looking at, I would say, okay, fine. If that's my last swing busted, I'll do the pendulum pullback and play for another short. It's going to go right here. And I'm going to do a standard pitchfork original. So now prices are right there. I'm like, okay, let's see here. 57, where are you? Let me just make a line of 57.5 for the. Oh, and you can see where I got in yesterday on that short. Boom, boom, quick little trades. Sold them at 57, bought them in at about 30.
Nice.
But here we are, right? Last swing busted to the upside. Boom. Price comes down, pendulum pullback. Will price run out of energy here and go to here? I got a swing actually right here. This is a older swing high, but it's basically where price bit the dust and took out these lows.
Sure.
Came back, boom. I don't know. It's anybody's ball game here.
Well, listen, man, I gotta get rolling. Thank you so much for showing us all this today. It was
I
wonderful.
hope this was helpful. I hope you guys learn and thrive from this. And not every tool is for everybody. I mean, I've searched around, so this just speaks to me and it makes my life easier. So I really enjoy it. And hopefully some of you will too. And, use those resources I gave you, the language of markets, Rapid FX, and I'll see you next time. Thanks, guys.
Awesome. Thank you, Matt. All right, folks. Thank you all for joining us. I think it was a wonderful opportunity for us to take a look at something that we don't normally look at. And Matt is a great guy. I do not want him to change his behavior at all. And we'll look forward to hearing more and more from Matt over time, I hope. Trade well, everyone, today. We'll see you for the coach's playbook in a little while. And thanks again for joining today. Have a great session.